This is Scott Bauer on the floor of the CME Group. And ahead of the last day of the year, or during the last trading day of the year, big buying of U.S. paper. Really just people just wanting to get in, not knowing what's going to happen with China, with the Fed, what's going to happen going into 2019. On that big buying of U.S. paper today, we saw the 10-year actually dip below 2.7, close at 2.695. That is the lowest it has been since the huge market sell-off back in February on February 6th. Not only the 10-year, the 2-year down at around 2.5%. So that 10-year flattening yield curve under 20 basis points to close the year. The 30-year also with the big buying today dropped down to 3.037%. So big buying at the end of the year. Now what would cause that going into next year? Obviously some uncertainty, but we see risk assets, the overall stock market getting hit the last couple months. Even though we've rallied back over the last week, 2 weeks or so, that would cause rates to go down as buyers come into the bond market and bid up U.S. Treasuries. In addition, trade concerns. They're definitely more of a concern. We probably should have seen that in maybe the metal, the gold market more so than we did, but the trade concerns also propping up prices for U.S. Treasuries. Even with the recent decline, the 10-year is still up for the year, just about 30 basis points or so for the year. But that being said, the 2-year, which really is correlated more to what the Fed does because it's the closer in, really tied to the Fed raises, up double that for the year at 60 basis points. Thus, that contracting of the 210 of the flattening of the yield curve that I talked about earlier, where we did end up the year just below 20 basis points. Crude slump that we've seen over the last 6 to 8 weeks, also, that's a heightened fear of possibly a global slowdown. Could be one of the other reasons why we've seen such a bid for U.S. Treasuries. Scott Bauer on the floor of the CME Group.